Hello and welcome to this December 29th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Bowley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're taking a look at Real D Inc., ticker symbol RLD. This is about a $1.3 billion consumer discretionary company. Technically, from the chart, you can see the stock actually opened for trading back in mid-July and just slowly trended lower over the next few months before finally putting in a bottom in actually the latter part of September, just below $16. Since then, we've been trending higher. But notice on this first move up, MACD was pointing straight up. But then as we put in these last couple of highs, especially the one in early December and again in late December, or just a few days ago, you can see that we put in higher prices with a lower MACD reading. So this is an indication that volume is slowing on the stock, or at least, or not volume, but that momentum is slowing on the stock, and that a pullback is more likely. Right at the top, just a few days ago, you can see we put in this bearish engulfing candlestick, and very quickly RLD fell from over $30 a share down to under $25 a share on Tuesday during the day, still closing above the 50-day moving average, but at 25.44. So it was only about 8 pennies above the 50-day moving average. Now, anytime we see these long-term negative divergences form, we do expect movement back to the 50-day moving average, and you can see here, literally in just 3 trading days, we went from a 52-week high down to a 50-day moving average test. So I do think that RLD is now at a point where a lot of the risk is out of the stock. It could continue to go down, but I like it from the current 50-day moving average area down to gap support at about $24. So this, I think, is a pretty decent area to take a shot on the stock. If it does break below $24, especially on a closing basis, I'd be careful because it probably would head down to the bottom of gap support, which is down closer to $22, and we don't want to take it down that far. So this is kind of an area, a range from the $25.50 area down to $24, where you can get in with relatively small risk. Now, it is a fairly volatile stock, so it's not for everyone, but the fact that it has pulled back and is closer to a key gap support area and the 50-day moving average does remove some of the risk, at least in our opinion. Now, the RSI, anytime you get a stock or an index in an uptrend, normally the RSI will provide some support when you get down into the 40-50 range. Normally an uptrending stock, you don't see it drop below RSI 40 very often. So because we have been in an uptrend and we have seen weakness recently, this pullback has caused the RSI to drop back to 43, which is where we sit now. And you can see this has been a pretty decent time to get in during this uptrend, anytime we've been in the 40 to 50 range. So I do think that RLD looks pretty interesting at this level. As far as a target goes, what I would look for is a pushback to test the recent highs up around the 30 to 30.50 area. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.